Hello viewers, we will be going over silver. In this video, we'll be going over the day-by-day probability tables, how we find the models, and we'll go over the day-by-day forecast for silver. So back to the technical analysis. Today we are up 93 basis points on the 1 hour chart. We are currently at positive MACD, slowly approaching to overbought RSI, and we are facing the 200 resistance on the 1 hour chart. On the 4 hour chart, we start to see a convergence in play. We're still in negative MACD. As for the daily chart, we are approaching to negative MACD. However, I do see a possible convergence in play as we are nearing support levels, or I should say this is the 150-day moving average support as indicated back in December 9th of last year. We bounced right off that level, and we may possibly see that action here as well. So if we do make a reversal and head up higher, I do see a possible resistance around the price of around $18.27. Reason why we see past resistance that date back to January 27th and around the price of back in January 7th as well. And also I indicated that we are narrowing a price range, so we have higher lows on this instance and we also seeing lower highs. So once we do reach that point in time where price gets in a tight range, we will see a spike in volatility to the upside or to the downside. So that's one thing to consider. As for support, if we were to head down lower, the next support that I see, if we also break the 150-day moving average, is around the price of $17, and we see a price concentration around that range as well, dating all the way back to November to December or mid-December. So back to the day-by-day probability model. As we progress throughout the day, we see a slight favor to the upside. We have a 40% chance of silver going between 0 to 7% up. And on the extreme case, we have a 10% chance of silver climbing 7% to 14% up. However, to the downside, we see a 30% chance of silver heading down lower between 0 to negative 7%, and a 20% chance of silver heading lower, negative 7% to negative 14%. Again, this model is now available in the link below, so do check it out. So we'll go over the day-by-day forecast for silver. So we have 1 day out, 2 days out, 3 days out, 4 days out, 5 days out, 6 days out, and 7 days out. So which one of these models we should focus on? Ideally, the model that is the best match to the current trend. Right here we have the current trend, and below is the trend that I believe is the best match. This trend dates back to October 4th, 2007 to December 1st or December 31st, 2007. So let me point out why these two charts are similar. So what we have here in the current trend, at the beginning, we start off at the middle Bollinger Band. Next, we proceeded to climb up, average above the middle Bollinger Band, touch the upper Bollinger Band. Afterwards, we see it take a slight dip and revert back to the mean right near the very end. So we have those points there. And in the trend in question, we start to see a similar pattern here as well. We start off at the middle Bollinger Band at the beginning of the trend. Next, we proceeded to average above the middle Bollinger Band, touch the upper Bollinger Band. Next, we finally proceeded to revert back to the mean, back to the middle Bollinger Band. So we have those points there. So what we have is 1, 2, 3 points. We also have 1, 2, 3 points. So there's reason to believe that the trends and patterns are the same. The outcome and forecast should be fairly the same. So the model that we just examined was October 4th, 2007 to December 31st, 2007. Back then, silver managed to climb up 8.7%, or 8.8% higher. If we head back to the day-by-day probability model, it lies on the 10% standard deviation of 7% up to 14% up. So again, we have a 10% chance of that happening. As for the other cases, we still see a tight range in between. But from the technical analysis, we are very near to a point where we might see a spike in volatility for silver to the upside or to the downside. So that is one thing to consider on the extreme cases with the standard deviation, the down 14% or up 14%. Again, this model is now available in the link below, so do check it out. If you enjoy this content, feel free to like, comment, subscribe, and thank you for watching.